Hello everyone, welcome to a new episode here at Sublime Traders. I am Logical Orange, and because today we saw that Bitcoin has been ranging for several days, I thought it would be a good opportunity to teach you how we can trade in a ranging market and how we can scalp and what are the possibilities to be taken into consideration. Let's go to the charts. We are here on Bitmex with Bitcoin US dollar perpetual inverse swap contract on the 1 hour time frame, and the first thing we notice is that we have been in a range for the last 5 days now, and this is, believe it or not, a good opportunity for some traders. Potentially institutional traders find this type of pattern in the chart very interesting because they use market making bots, and currently the range is perfect for this type of trading. For example, like in this candle, which we basically covered about 6%. Well, what institutionals do is that they place orders in the upside and in the downside, and if they get filled, it's okay. If they don't, they move on. But trading in a range is a very important source of profit for this type of trading. So let's see how we can apply the current pattern of our chart into trading. Basically, what we need to do firstly is to identify the supports and the resistances. This is the first step we need to make. We don't really need to go into higher time frames for this. We just need to stay on the 1 hour time frame and identify supports and resistances. As you guys can see, I have already started and have identified some supports and resistances. As you can see here, we have a support at 9,976 and another at 9,882. On the upside, I have also identified 2 resistances, and the basic idea here is that we are trading in this range, and we will stop loss at the outside of the range. So right now the price is in the middle. Okay, so when the price is in the middle, it's almost logical we won't trade. We don't know which direction it will take. We are very uncertain here. What we will do as retail investors, so we don't have, let's say we don't have access to bots, we don't have access to volume meters as institutionals do. What we will do as retails right here is we will just post some orders on the outer sides of this range. So for example, I have, as you see, I have the resistances in red and the supports in green. This is on purpose because on the green side we will post buy orders, and on the sell side we will post sell orders. So why I have identified 2 is because we are going to have a laddered entry also. So basically, let's say we want to trade for scalping. We have allocated like 5,000 contracts. We will buy 2,500 here and 2,500 here. This will get us an average entry price of about 9,919, and on the high side we can sell, so short 2,500 here and 2,500 here, with an average entry price at about the middle between the 2 resistances. So what about the stop losses and the take profits in this case? It is also very simple. For the stop losses, I have plotted some yellow lines that you can see right here. This is the stop loss for the short, and this is the stop loss for the long. And you place the stop losses in relation with the closest pivot or support or resistance you have on your chart. In this case, I have a pivot right here at this level, and I have placed my stop loss just above it. This is of course flexible, you can post it right here if you want, and on the low side, on the buy side, I have the same formation. What about the take profits? So let's imagine we take a trade and the price is about this level. This is ideally for us the best entry. So let's place a short trade as this. Let's imagine a short trade like this. We have the stop loss right here, and for the take profits it will of course be placed like this. So our take profit will be in the bottom of the range. We can also use the two support levels that we identified as take profits. So for example, this could be take profit 1, and this could be take profit 2. On the buy side, we can imagine the same type of trade that we can plot right now. So let's imagine a perfect entry, average entry at about this level. We can imagine a take profit at this level, and the stop loss should be at this level. Now, as you see, the risk-reward ratios are very good if we respect our entries. We just don't need to hurry. The price will eventually come to us. We just place our orders and wait. As you can see in this example, also the difference between the low side and the high side is a bit higher. So my stop loss here is a bit higher than my stop loss on the low side. For this, we will need to compensate on the high side in order to have the same risk-reward ratio. So right now we are betting that the price will be trading in a range. This should be the range. But what happens if the price leaves this range? So I recommend for this strategy 2 accounts. I'm continuing to take Bitmex for example, because it is easy to use. You only have BTC collateral. Even US residents can connect to Bitmex if they use a VPN. So it has many advantages, but you can also use Bybit or Binance Futures for this type of strategy. The only thing is that you need 2 accounts. On Bitmex, you can also trade paired with you can trade on perpetual inverse swap, or you can trade the normal futures that expires, for example September or other months of expiry. The only thing to take into consideration is that if you trade large amounts of contracts, you will have slippage problems on those contracts, the expiring contracts, because the volume is a bit lower. So getting back to what I wanted to say is, if the price action eventually leaves this range, for example on the high side, well, on the second account you can prepare a potential entry in the breakout style. So for example, you end your range trading right here. So these are the stops, the effective range is here, these are the stops. As soon as the price passes this level, it is almost certain that we are now in a trending price action movement. So on the second account, we can activate a buy order at about this level. Let me just mark it for you. So at about this level, I am almost certain that I can place a buy order, and it would be filled, and it will continue to go on. Of course, this will be taken. We need to take into consideration the volume, the speed that the candle has at the moment of the break on this level. And the stop loss, we can place the stop loss for this trade just below the previous stop loss we had for our range. We also need to check our pivots and our supports. Just place the stop loss below this support levels. Well, on Bitmex we also have another problem, is that we, as you know, we have large wicks like this one, for example, that can hunt the liquidity of a certain level. For example, the institutionals know that people just can stop loss at about this level, and that they can chase this. So in order to avoid having this issue with large candles, I recommend trading this type of strategy on exchanges that have less institutional investors. An example I can give you is Bybit. There are a lot of retail investors there, and the wicks are smaller. Guys, this is all for today's video. I hope it helped you understand a bit more about how to trade in a range and how to profit in a choppy market of this type. If you like this video, please don't forget to subscribe and leave a like by hitting the like button. If you want to know more about Sublime traders, don't hesitate to join us on our Telegram channel. Thank you and happy trading!